Is there any other questions in there? Because I can't see any of the questions on my end right now.
We do. We definitely have a question. You want me to run it off?
Yep. Yep.
All right. So we answered the one about the pairs. It says, do you get back into the trade when you took out the bigger lot size? So basically, when I was saying how to compound and pyramid account after the breakthrough and the pullback,
Right.
do you get? So the question is, do you get back into the trade when you took out a bigger lot size on the second? When it's a pullback, do you have to get out first? If not, how do you add money to a trade you're already in? So I
Oh,
think you got that.
okay. Yeah, well, yeah. Most people think like as if you like if you're using your, your MetaTrader 4 account and you're going in and you're like taking partial profits where you can kind of like go in and lower the lot size and take a little bit out as the market's giving you profits. It's not the same thing where you're just adding in, another lot size. You're gonna have to basically open a new position as the market's moving, but we won't do it in a sense where we're chasing the market. We want the market to come back to us. So even what you guys see right now on my screen, like we're looking at GBP CAD, if I was in essentially right here, right? Let's say I got in right here for the sale, right? And I'm seeing it drop off, it's looking great. And I'm thinking to myself, okay, this is a pretty good entry. It's made a lower low from this standpoint. Awesome. If I see the market starting to pull back higher, my first thing is if I get something coming back up to this area here, essentially testing right up in here, right after it broke through, this is where I want to see if I can get another entry again for a sale opportunity. Because now I know we get a breakout, retest, drop off, and it happens consistently because even here we made a floor where price bounced again, went to the upside. The rules still apply all over again. So now if I entered a second entry, right? Let's if I took this right here for a secondary sale, all right, and now this drops lower. This is my new floor. As price comes back up, and if it retests, drops lower, right? Now I can do the same thing all over again, and now you're just scaling your way into the trade more and more and more. But like he said earlier, most of the time you'll take a small position to start off a movement, and then after you get some equity behind you, you'll start to scale up from that point. And it works the same way with the harmonic scanner, with the web analyzer, and we have other tools that help us find entries. Something like the currency strength indicator, where we'll go back and test and see what the strength of the two currencies are, and then we'll jump in as well once we get that confirmation. And then we use different tools like the RSI for divergence. And the thing is, you want to look for divergences near areas like this when you see the market making a high, a low, a lower high, or something of that nature, even a higher high, where if this is making a low and a higher high, and you're getting a divergence on your RSI where you get a high and a lower high here, that would be something to look for because now the strength, the overall strength in the market is showing you that it wants to move lower still. So things like that start to help out. Like something right here where we had a high right here where the market made a push up, and in here it came pretty high, almost up to our overbought area, dropped down, and then this area came right back up almost as high. This made a higher high here, but a lower high on our RSI. This area here is lower than this area, showing us that the strength isn't as strong as it was before. We start to see market push lower. And remember, this area here is what we were looking for because when price came down, it left a wick, tested, finally broke through. And we were waiting to see if we can get a retest of this area before we push lower. And we did after we got that retest. So you're always waiting for a retest for you to scale back into a trade. Oh yeah, no problem. No problem if I answered that one. It says between MT4 and TV, what do you guys find yourself using more? Um, I'm trying to figure out like what does he mean by MT4 and TV? Is it like a trading view? Oh, okay, okay. Yeah, trading view is really nice. I like it because it's a lot of tools and I can pull this up anywhere I go. I find myself using MT4 a lot more than TradingView because I do most of my entries from MetaTrader 4. So that way I'm kind of it's more efficient for me because I don't have to jump back and forth. Also, one of the issues you run into when you use TradingView is that the brokers are different.
Outline, you set up, and then
I can hear somebody, but it's not coming through
Trying to figure it right now.
Give me a second.
Yeah.
Uh,
There we go. I'm just gonna mute all right now, so that way I can keep going. And any questions you guys have, just type them in, so that way I can see what you guys are doing. I'm gonna unmute Jay Wayne for now, though. All right. All right. Sweet. Okay, so the Trading View is a really good tool, but this is the reason why Trading View has its issues. If you simply use Trading View, right, the brokers that they list, like Oana or any of the others that you may run into, may not match up what you have on JAFX or FX Choice or Traders Way or whatever broker you're using. So sometimes you'll see a chart here on Oanda and it'll be completely different from what you have on your JAFX account. So you kind of run into an issue where the brokers have different movements because the servers that they're using aren't all the same. Like everybody has different liquidity providers. So the actual movement you see may not match up with what you have on your actual trading platform with MetaTrader 4. So TradingView is a great tool to kind of gauge what the market is overall doing. But for like pinpoint entries, I stick to my MetaTrader 4 because that's where I'm doing most of my entries from that platform. And MetaTrader 4 has a lot of nice tools. It's just a lot of people don't like to use them because you got to like download some things and kind of finagle your way through a little bit. But it's really useful once you kind of get used to the buttons and the bells and whistles. But one of the things that Jay was talking about that I really think is very powerful is let me just show you what I mean. I'm going to just lower this out of the way for a second and give you guys a real quick overview of what I'm talking about. If we're talking about drawing trend lines, right, and I see this market, right, making highs, I officially cannot draw a trend line until this crosses this level here, period. Like if the market isn't moving higher from this point, really just bottom basement, rudimentary question, right? If the market doesn't move higher, if the market doesn't move higher from here, are we actually trending? Okay, that's the question. If we have a low, a high, a higher low from our previous, but we're moving even with our last high, are we trending? Or is it just a sideways movement, right? Because now once we're here, the market can just stop from here and break lower down to this point and here, and we could just be stuck in a range, right? And at that point, what is your trend line going to do for you when you're stuck inside of a range? Absolutely nothing. So in order for a trend line to be considered valid, it needs to make a higher high from this point. Now, when it does make a higher high from here, let me move this out of the way really quick. When it does make a higher high, at this standpoint, the first thing you're going to do is you're going to draw out your level. This is a level of resistance that has now been broken and has potential to become support. This is how simple it becomes when you're looking to scale into a trade, okay? And this happens over and over and over because we're looking to see. Now, don't get me wrong. Most of the time, it won't be this clean. It won't just be super, right, easy, right in front of you. Like, oh, wow, this is amazing. This is super simple. It won't happen that way. But when you see something like this gives you a lot of confidence because now we can double back, look at the market and say, if this was an area of structure, let me pay attention to it. So now this is the rule. The moment price closes above, right, a candle closes above where this area is, you officially can draw your trend line now. So let me get my trend line tool. So from here to here, trend line is now valid, right? Let's make this a little bit steeper so we can get a better idea of what we're looking at here. There we go. So, cool. Now, trend line is valid. Everything makes sense. The world is right. Now, when the market breaks this area, we're not blindly buying this because essentially what happens a lot of times is the market doesn't have to come back and test our trend line right away. What can happen is, and I'll take this and move this back up so you can see what I mean. The market can come right to here, test our level of support, break higher, right? Make a higher high, and then come back down and test our trend line somewhere in here, right? Or somewhere up in here in this area, right? Like move sideways, hit our trend line, and then we'll get another move to the upside. But essentially what's happening is once this made a high and a low, the rules are all the same. We'll move this up and everything happens again. And now guess what happens? Your trend line gets broken, or your level of support, your level of resistance, now support gets broken and price comes down and does what? Test your trend line now. So now you're like, oh my God, Kurt, it didn't make sense. It broke my area that I had marked up. But now did your area still remain true because we're still uptrending. We're still making higher highs, right? Higher lows, higher highs, higher lows, higher highs, higher lows. Nothing is being broken. But once something like this happens, you have to remain true to what you have because now you still have structure on your side. Now, in a case where this is completely broken, like let's say this thing just completely falls apart, right? Because we're going to answer all the questions. We want to get this right. It breaks all the rules. It comes down and tests this level again, right? Breaks everything, comes down, and now all of a sudden we're looking at the market and we're like, wow, what do I do now? Do I just get in for the buy or the sell? What are my options? And now the market starts to go back up, test this area, right? Comes back down in here, and then it runs right back up into this zone. And this is what happens a lot, right? We're looking at the market and it's just completely wacky. We don't get it. None of this makes sense. Why is this happening? What should I be trading right now? This is where you have to know that structure still plays a part in everything you do. All these levels that happened in the past are still useful in the future. Okay, so now we'll take this level here, right? Price used this as once resistance, broke through, became support. Price came up. We had a huge break of our trend line all the way down. Once again, like we said, it came down and tested the original area of support right here. And all it did was test this area, bounce higher, broke through everything and hit our trend line here. Now, have we made a higher high at any point inside of this? Right? This was our last high. Price came up and hit our trend line and stopped on the dime. And now at this point, you're trying to figure out exactly what needs to happen. Hold on, making sure this is all still working. It says I've been logged in from another device. I want to make sure everything is still cool. Can you guys hear me? Am I coming through clearly?
Yeah, we can hear you.
Okay, cool. Cool. Just want to make sure. So this is a lot of times where people get confused and they get caught up in what's happening because this breakout of our trend line and all of a sudden the market's just acting wacky. They don't know if we're going to just keep dropping lower still. Should they be taking a buy opportunity? Should they look for a sale to break lower from here? The whole thing that you need to pay attention to is this area where we began to this area here is everything we needed, right? Because now even if we use this on a level with drawing Fibonacci, right, we're still valid. Everything still makes sense because we still have our swing low to swing high, right? Everything happening inside of this area, no matter what this does, as long as it stays inside of this area, we're all still in a valid zone. So now no matter what goes on, price can come up, test the level here. This could just be a very high level like the 88.6 on the fib level, or we're just coming back up to almost double top in a sense, right? But now we got our trend line, which is still structure, playing a part. Price can stop, break lower. Now, I wouldn't blindly just sell, right? If price comes to this level, essentially what you're looking for, and I'm just going to give you like a really small idea what I mean, is you're looking for price to start pushing away. Something like this, where price is pushing away from this zone. And now you start to kind of gauge what your movement needs to be, okay? Because now when price moves away from here, where is the first level that price is going to have an issue, okay? This is where you say, is this trade worth me taking, right? From here to here would be your gauge. Now, depending on your time frame, if it's a daily or 4 hour, something of that nature, you can get a good amount of movement, right? This may be maybe a 30 to 50 pip move just from trend line to our first level of resistance right here. And then if it breaks lower still, right, we break this area from here to here, you potentially have another move that can run all the way back down again, because now you look left and you say, when price got here, it came straight up to this area. When price came here, it came straight down to this area. Price got here, came straight. So within this area, price likes to move in a very fluid movement, right? It doesn't stop and stutter within this zone. It likes to break straight through. So now that we have a past history of what price likes to do, it likes to move cleanly top to bottom. We can see a breakout from this area to here. So now in your initial entry from here, you see a little bit of movement coming away. You may take a sale to this position, monitor it to see if we're going to keep moving lower. If we have a break of this area, now it makes a lot more sense because we can break lower from here, then retest, right? So now let's just remove this one and give us the full idea of what I mean. So we can just retest from this area here. We can break from here, break down into this zone, right? Clean movement. and then we're back down into an area. And this is where a lot of times where people see the, you know, in the head and shoulders pattern, we got a shoulder, head, shoulder, and also we have a shoulder, head, shoulder situation happening here. And this is where inside of these movements, they're fractal movements within all of this. And I don't want you guys to get caught up in the inner workings of the market correcting itself and you start to doubt yourself. Everything you need is to the left. You just have to remove the noise from all of it. And now we can start paying attention to what can come in the future. So with all that being said, I'm gonna go back to the chart, right? We're gonna move down here back to the actual candlestick chart and see what we have working, what we're working with here. So we'll just take this top to bottom movement here, right? Like this whole thing from top to bottom, right? Let's just zoom in a little bit. Now the market made a high, a low, pulled up slightly, a little sideways movement, lower high. The moment this candle here broke this low, let me just drop that line there so you can see what I mean. Actually, I'll just use what we have already on the chart. Makes more sense. So let's just take this one here, right? The moment this candle broke below this, we can officially draw our trend line now. Okay, and we're just gonna go from top right here to this candle here. Very simple. This is valid now. This area, because we're gonna put our trend line here because this is where the breakout began. All right, I wouldn't put it here. I will put it here because this is at the very beginning of where the breakout began. So high to lower high, valid because we're making a lower low now. Everything's gonna pan out, make way more sense. Now market's moving. What did it do? Came back up, retested a level that was once support, broken, resistance, pushes away, price moves sideways, right? Comes up really close to our trend line and area right here of resistance, pushes lower. Now this candle's made a lower low, everything works out again. And this is the part where a lot of people get lost. Once you make a lower low and the market keeps moving, you reevaluate your trend line now. This is how this is supposed to work. Okay, the market will continue to move. You have to move with it. Okay, this is very important that you understand this because if you stay back here thinking that this is going to give you something, you have to continue to evolve with the market as it moves. Okay, so now we got a high, a low, sideways movement, lower high, lower low. This is our area of structure now. It made a lower low from this standpoint, moving right where this wick was. Right, this is our area of structure. Price came up, left a lot of wicks, kept testing that area, pushed lower still. All right, little sideways movement, not a whole lot of volatility, and all of a sudden we break our trend line. Right, price is moving sideways, still staying below our area, not really making any highs. What did price do? Came back, broke below our trend line, and tested that previous low. So everything we needed was here. We knew if price breaks any of these zones, we're being patient to see what happens, right? It broke our trend line. We can't blindly just take a buy. We have to see some kind of buying pressure come from this point. Now, for most people, they say, okay, Curtis, where do I get in if it does? If it broke here, why didn't I take the buy from here, right? Once it broke out from here, it did not make any kind of volatile movement, right? It broke our trend line and nothing here gave us a clean retest or a push away or anything of that nature. It just broke and went sideways from that standpoint. So even if you did decide to take a buy and the market's just moving sideways for hours, a lot of times this is just going to keep you in a position where you don't need to be in. Close the trade. Close the trade. We all know what a good trade looks like at this standpoint. For people who don't know what a good trade looks like, one, a good trade has to happen at a certain time of day. That's just rule number one. We cannot ignore the time of day we enter the market. Period. I don't care how attractive a setup is. If it's happening at 4:30 in the afternoon, that is not a good trade. Okay? We have to be realistic. I know sometimes it's tempting to jump into the market because it looks good at 3:30 in the afternoon. I may get a real quick push. I assure you, you will rarely see a trade after 2:30 move in a volatile manner. Okay? It is very, very rare that you see any trade just boom from 2:30 all the way into maybe 8 o'clock. Anything after 5 o'clock, anything around 4 o'clock, near 5 o'clock, you don't want to be in the market for one, because if you're in a trade after at the moment 5 o'clock hits Eastern Standard Time, you're going to get caught in something called the swap. And at that moment, you're going to be giving money to the broker just because you were in a trade. You could enter that trade at 459, and that broker is going to charge you a swap. Okay? A swap just simply means that every day at 5 o'clock, Forex resets for a brand new day. Okay, so and essentially 5 o'clock is like midnight for Forex, right? They consider after 5 o'clock an entirely new trading day, and they're going to charge you a fee for having a trade open for one day leading into the next day. But you've only been in it at 4:59. It's 5 o'clock. You've been in that trade for 1 minute. You've been charged a fee. Okay, it makes no sense to do that, especially when you know there's no real volatility coming in the market during the Asian session, during the Sydney session. We won't see any real volatility until just before the London session starts up. All right, so it's important that you understand that certain times of day you're not going to get a lot of big movement. It just won't happen unless you're comfortable with letting the market move sideways and you essentially see something happening in the horizon. But for the most part, if you're brand new and you're not seasoned enough to actually see those kind of movements coming to fruition, I strongly suggest you wait for very profitable time frames. My suggestion, anything after 2 a.m. Eastern Standard Time to 2 p.m. Eastern Standard Time. Literally, if you trade from 2 a.m. in the morning to 2 p.m. in the afternoon, you will be just fine with volatility. Okay? You will be just fine. You will see everything you need to happen within that time frame. You'll dodge the swap. You'll catch the most profitable sessions with the London leading into the New York. You'll get all that overlap of the largest banks working together during that time of day, and everything will pan out in a much more efficient way for your trading. All right. Now, what we talk about here when we see this trend line being broken, right? Back to the subject. Don't want to get too far off track. When the market's breaking your trend line and still respecting levels of structure, because just because your trend line was broken, look left. Where was our last low? Right about here where this wick is. What did price do? Came back and retested the low and then started to move higher and broke our trend line, right? So now everything starts to pan out. We're in a much stronger position, but we still have this level here. And remember, I told you, if you're going to enter a trade, where's the first area? Yes, 2 a.m. to 2 p.m. Eastern Standard Time. Exactly, Tabitha. And when you're here, and you decide to take a buy, if you decide to take a buy from here or from here when it breaks the trend line, your first thing is how far away is my first level of resistance? It would be here. This is where price broke, tested, came down, right here, tested, kind of went sideways, broke back lower, and now we're in an area where we can see the market boom back to the upside because we're in a position where this was once a floor again. We're getting price pushing away, breaks the trend line, big movement from here to there. And now you get these false breakouts, right? And a lot of times people get so caught up in this, like, oh, Kurt, it took off and it broke. Yeah. And all of a sudden, this candle came back and brought you right back in here. It erased everything that this growth candle gave you, okay? So now when you see this happening, this starts to get people in a very frustrated mindset. And this is where I want you guys to hear us very carefully. When we talk about this, and we talk about you guys making a lot of money as traders, you have to approach this market with an unbiased standpoint. I know I just talked about this earlier at a lesson I had on the way here when I was coming back home. I was talking about like how sometimes people get into a trade, right? And you guys will take a buy or a sale. Like let's just say we took this buy, for instance, for example, and it starts moving up in profit. This buy instantly becomes Jesus. This is, oh, not the buy I know and love. This is a buy no matter what happens in this market. No one can tell me different. This is a buy. And all of a sudden it smacks your trend line and drops lower. And now it goes lower. And what do you start saying? It'll turn around. It'll turn around. I'll wait for it to turn around. It'll come back. It always comes back. And then it drops lower and lower and lower. And now you're negotiating with the chart. Jesus, please just come on back. I just want to break even. Bring me back a little bit in the profit. Now I close it. Right. And then what happens? Price comes back up. Right. You get back in profit. And then what do? Oh, it's fine now. I was right. I'll let him just ride. You begged and pleaded to break even. It comes back up, and then you stay in it anyway. Okay? So we got to get out of this situation where we're just Holy Ghost trading, where we hope that it does this and we hope that it does that. We have to make sure that we have structure on our side, and we're very stingy with our losers, right? It's okay to close out a trade for a loss because remember, when we first entered these positions, like we said in the beginning, we're entering these positions at a small position, at a small standpoint. We're not entering with the large lot off the first one, okay? We want to get in for something small, get some equity behind us, let it grow, and then after we see some higher highs, we see it come back to retest, then we'll take another position because now we have that equity. Now, mind you, we start off small because if the market does go left, and it takes us out the trade, it's all good. Our risk management was there. We weren't over leveraging. Everything pans out because in the beginning, we don't know exactly where the market's going to go. Okay. This is the thing where when you start off small, you can afford to have a string of losers. Some of the most profitable traders on the planet only win like 40% of the time. They're losing the other 60, but their losers are so small that they can absorb that. Okay. And it keeps you in the mindset of, okay, it's fine. I'll have to figure out exactly. But think about it this way. If you enter this trade for a buy, right, and you had a small lot and it broke and came down lower and broke this level that was once an area of support and it now becomes a resistance. And now you can essentially take the sell opportunity for a small lot again. Okay.
Wow.
This is where when you approach it from an unbiased standpoint, you're not trading what you feel, you're trading what you see. And trading what you see is much more powerful than saying, I think it's going to do this. I feel like it's going to drop. Something about this just makes me feel good. It's not about your feelings. I promise you. If the market is going to drop, you need to see it first. It needs to show you something, right? If we got right here and we said, oh man, Kurt, it stopped right on the trend line, like price closed right on the trend line. This next candle is going to come pushing right back down. We got an A, B, C, D move happening right in front of us. All of a sudden, it just breaks higher, right? And now we're negotiating. Oh, it's going to hit this area. It's going to come back down. It's going to smack this zone that was once a ceiling and come running right back down to our trend line again. No, we can't do that. We're not here for that. We have to make sure the market shows us something first. Okay, so essentially, if you miss this move, it's okay. It's all right. You don't have to hit every single trend in the market. You don't have to have every single trade go your way. Okay, but inside of these losers, you want to lose a trade where there's an opportunity to get back in for a better position after a retest. So in every loss, there's a lesson and a setup for another opportunity. Does the cloud help you to decide better? Now, the cloud with the Ichimoku is a very, very powerful tool. Like I like using Ichimoku with my crypto trading and Forex trading occasionally, but the cloud actually has a lot of different information layered on top of it. So sometimes you'll have a situation with the cloud where if you have a strategy, like the strategy that Kathy Kirkland teaches with the cloud, phenomenal strategy. The way she breaks it down is beautiful. It's simplistic. It's nothing that you have to go back to college to understand. So the cloud can help you a lot when you're learning how to actually find entry points and when to let the market let's run. Because you'll tell yourself, okay, we just broke out of the cloud. Let's take that. Bollinger Bands are great as well. The Ichimoku cloud works great. The Bollinger Bands can give you a very good indicator of extreme overbought and extremely oversold. And that middle area in the Bollinger Band is almost like a magnet where price always wants to get back to. So a lot of people use that middle area in the Bollinger Band to kind of find entries. Once they see price bouncing off the middle Bollinger Band, they'll get back in for the consistent move if it's going to continue going to the upside. Let's say if it broke above, hit the top Bollinger Band, came back to the middle, they'll get back in for that buy opportunity and let it ride higher until it's a top Bollinger Band again and just keep taking those opportunities. So the Bollinger Bands are great. But what I essentially want to do tonight is just show you guys how if we take the market and look at it as what it's worth, right? We're not here to try to find, every single solitary trade. Like I'm going to go to something random like Audi NZD, right? Like I don't think anybody really trades Audi NZD on a daily, right? We're going to just go to something like this on a daily time frame. And I'm going to minimize this. I don't even know what this is, but I'm going to get rid of that. So I had all kind of weird stuff on here. All right. Now, Aussie NZD on a daily time frame. Right here, we see we have a nice trend to the upside, looking good. If we wanted to draw a trend line out with this, we would be able to do it because now we have a low, a high, a higher low. This candle broke and made a higher high, right? Everything's starting to make more sense here. Things are starting to pan out. And this is on a daily time frame. If I put Bollinger Bands on here, it would make even more sense, right? I'm pretty sure this would be just above the middle Bollinger Band, working its way higher and higher, testing that middle Bollinger Band. I'm going to show you guys one tool that I like to use when I first started out, and I think it's something that could benefit you guys as well. It's like a real simple thing too. Nothing too crazy. If it allows me to put it on here. If it doesn't, it's all good. I'll go to my MetaTrader 4 if it doesn't allow me to put it on here. It's going to let me. Let's see, indicators. Yeah, it's being difficult today. It's all good. If it doesn't, it's all good. So I just wanted to go through this really quick, and then I'll go to MetaTrader 4 and show you how I will use my indicator to help you out. But just here, right, from low to high, higher low, I'm gonna just keep it very simple, like rudimentary simple, right? Here to here, trend line, right? Low, high, higher low, boom, to the upside. First things first, find our area. That was our last area of resistance, would be right here. The moment price broke this area here, my trend line is valid. It didn't come back and test my trend line, but it tested our area as an area of support, pushed higher, right? This thing is going crazy. We look left. This was a zone that could have been an area of resistance. So I'm going to mark this up as well, because this wick right here shows that price. Oh, here we go. Stopped right about here in the past. Okay. And what did price do? Came all the way up, hit our area from the past, stopped on a dime, pushed lower. Even if we used this zone for area after it started pushing lower, everything from the past is going to help you in the future. Okay. As one of my trading mentors would tell me, none of this animal goes to waste. Okay. We're going to use every bit of what we got in the past to help us in the future. So now we're breaking out, making higher highs, but we have everything. We know where the ceiling is. We know where the floor is based on all our past information. Even back here, this was an area here where price broke higher right here. So we knew when price did take off, it would run to an area of resistance here. It moved higher. Next area of resistance would be right here. What did it do? It broke out, retested, went more to the upside. So now every step of the way, we can do this again. Now guess what happens? Every time I made a new high, we were able to take our trend line. We went from low to high, low, kind of consolidated from here, moved higher still, broke right here, made a higher high right here. So now we can do the same thing from low to higher high right here, right where this candle's wick is. So move close to the body, right about there. And price kept going higher and higher and higher. And then look what it did. When it finally ran out of steam, right, and it finally came down, it came to our trend line, bounced, broke out. We didn't get a retest. And what did it do? Kept going higher. Last bit of push to the upside. Now, this is where a lot of people get confused. How did you know it was going to fall from here, Kurt? What told you it was going to fall from here? I just have to look down at my RSI and I go from one high to the next high. It is very, very simple. If this tool, and this isn't even a tool, this is just price action, right? This is a high to a higher high, okay? On the RSI, I have a high to a lower high right here. The RSI is the relative strength index, okay? It's giving me the overall strength in the market. So the candles are showing that it's moving higher, but it still broke the trend line. This is another push up, but a nice push up, and it's a setup for the sale. So now the market turns around, comes back, and our old trend line was respected, right? Price came back, hit that, bounced higher still, came up, one last double top after it broke and completely fell off. And we knew all this was on the horizon simply because of what we had here, from a high to a lower high, and up here giving us a high and a higher high. And one of the ways that just helps you out, another tool that can help you with this, is the moment I see divergence here, I'm looking at the currency strength indicator, which is a tool you can download. It's a currency heat wave tool. You can download it on your Android market. It allows you to see the overall strength of all the currencies in the market. So now if I'm looking at this and I'm saying, right now, the Aussie should be stronger than the NZD, even though it's at a high point. That's what I'm looking for. The moment I see something move up this high on my RSI, but it's not making a higher high, but it made a higher high here, this should match up with what's happening down here over and over. Okay, the RSI is another prediction of the past of the current market. No. The RSI is far from that. All the RSI does is show you momentum. It is a momentum indicator. It doesn't predict anything. It doesn't give us a futuristic view of what's to come or anything of that nature. It just basically shows you the overall strength and the overall weakness inside of this currency pair. Okay, it shows you that the market's going to move to the upside if it stays moving above this 50% area in the middle here. So like if I drop the line somewhere, let's say right about here, right? If price stays above this area and likes to tend to kind of just stay above here, like you can see when prices in the uptrending market, like we're just trending strong to the upside, you can see the RSI likes to kind of stay at the 50 and above, 50 and above, 50 and above, 50 and above. The moment it started to weaken and it broke our trend line, it broke below the 50. The moment it broke our trend line here and showed us that it was a downtrend ensuing, broke our 50, came back up for a last test, didn't make a higher high. The strength wasn't there like it was here when it moved up. Okay, sign number one. Starts to drop off. We got some movement going lower still. We're making lower lows and lower highs. If I check my currency strength indicator, my currency heat wave, drop off. Okay, so in the beginning, when you start seeing these things, it will be very, like, I don't want to say difficult, but it's very confusing because the RSI is doing all, it looks like somebody just took some spaghetti, right, and just slapped it on the bottom of my screen. It's like, how am I going to make sense out of spaghetti, Curtis? It's not so much about looking at the lines to make sense out of all this, you know, up and down jagged movement. It's about catching it where it counts, right? When you start seeing the market make a very strong push, right? Like you got these huge candles and then it just stops right here. Like you start seeing small candle, push up, big push down. This is where you're going to start to say, let me check this RSI and see what this trend is really doing, because this big candle is starting to run out of steam up here, right? It made a higher high, but is it going to come back and retest this area? Because the first thing you're going to think is, okay, we made a higher high. Is it going to test here and stay above? Because this should just be an area where it bounces and goes to the upside. And all of a sudden, it breaks below, goes sideways, a small little test higher, pushes lower, right? So now everything we talked about looking left, right? This entire uptrend is going to help us now with the downtrend, right? All our areas that we have marked up, what did price do? Broke lower, retested. Came to our areas, broke lower, retested, pushed lower, ran into this area, wicks, false breakout, right back up. And now everything we had on the way down is going to make sense on the way back up. And it's just the same thing we're dealing with now. We're waiting to see if price is going to just break higher, retest from here, and keep going to the upside. And potentially, if it does go higher, the first thing we're looking for is to see if it's going to run into an area of resistance either here or here. Okay?